My name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com, and today is Wednesday, ladies and gentlemen, the 2nd of July. So I hope you're all feeling nice and kind of, I wouldn't say refreshed, probably not, but hey, you're all feeling okay. I hope that, at least that. We're continuing with the job numbers, with the US job numbers. So we don't forget that this week is a little bit of a shorter week because on Friday the US is closed, and we'll get the NFPs on Thursday. But today we also have the ADP. So stick around. Hopefully you'll enjoy the session, and I'll see you in a bit. All right, ladies and gentlemen, hello, and good morning. Sorry for the little freeze of the camera there. So we're now back and running. Look, welcome everybody. Welcome. Today's Wednesday, and today's the 2nd of July. So we're starting the second. Well, yesterday we started the second month of summer. So I hope this the first summer month went okay for you. Well, I hope it went well, actually, to be honest, but you know, sometimes okay is fine as well. Look, we're going to talk markets. We're going to talk US job numbers. We're continuing with those. Before we jump into any action, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. I'm just going to put my usual good morning in the chat room. Good morning, everyone, ladies and gentlemen. Just a quick reminder that this session is for those who want to join live and want to maybe ask questions. Not saying that you cannot ask questions in the comments below, but it's just like I said, it's always nice when you have a question coming through live, and yep, this way we can interact a little bit more. If I know the answer, I'll tell you that I know the answer. If I don't know the answer, I will tell you that I don't know the answer, but I will research and I'll get back to you in the next show. So anyway, ladies and gentlemen, also before we jump into the charts, a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. Ladies and gentlemen, let's jump into, well, the first one I want to pick up here is Nikkei 225. I'm looking at the not the cash index, basically. So yes, we were seeing a reversal away from that 40,400 zone that I talked about previously. What's interesting here is that looking at this picture, we kind of formed something of a shooting star, maybe, basically indicating a little bit of a retracement. There we go. We got that retracement. Also, it could be seen as an island reversal here as well. This pattern with the 3 candles. So yes, we're seeing a nice little retracement back down. To be honest, it's all fine because we cleared the rising wedge here. And by the way, this is one of those examples where I talked about, I think it's going to be in Forex. I think it's going to be in AUDUSD, but I'll confirm that when I'll jump into Forex. That I talked about this in previous webinars. So in general, rising wedges tend to be bearish indications. Falling wedges tend to be bullish indications. So in a way, you could have said like, oh, maybe you should have broken to the downside, but not in this case, because the prevailing trend, we look at the prevailing trend as well. The prevailing trend was to the upside, is to the upside, and before entering this formation, and that's why the greater chance for this one is to see a breakout higher. There we go. We got the breakout. We got the move. We got the move towards the highest point of December of 2024. We surpassed that a little bit, as you can see, and then we drifted back down. So in a way, on a weekly, you will see that we actually kind of made something almost like a false breakout. I would say almost. I mean, I was still kind of opened above that, so that's why it's kind of, I would say it's kind of almost. Anyway, but the fact stays the fact that it drifted lower. So what I'm going to do here, I'm going to still aim for the upside, but I'm considering a possibility maybe of testing the upper side of this broken rising wedge pattern. And if we can do that breakout here, then wonderful. I will consider a move to the upside. So if we do start falling below the upper side of this rising wedge, then I'll consider maybe a move lower. However, I want to be a little bit more on the careful side, to be honest, because look, previously I talked about this neckline, potential neckline of a possible inverted head and shoulders pattern here. It kind of worked out nicely, so if that's why my downside scenario is going to break below this neckline. If we can clear that, yes, great, I'll consider a move lower. China 50, it's an interesting one here as well, and we remain above all the EMAs here on the daily chart. That's great. I said to you before that I will consider this one still as a kind of as a bullish setup, but I would prefer to see a push above the 13,000 kind of 800 zone right there in order to get a little bit more comfortable with the upside. For the downside, a drop below this slightly flatter upside line. Okay, you can start looking at this steeper upside line. Both of those lines are tentative, so that's why we really don't really put too much emphasis on neither of those. It's just a kind of giving us a helping hand here. So I would say that you can start looking at the 50-day EMA instead, shown here as the green line. If we do drop below it, my next target is the 100-day EMA, and if that gets cleared, we will go, could potentially go lower, because again, we don't know. I don't have a crystal ball, so I cannot really, tell you that it's for sure going to happen that. But in general, it increases the chances for a possible move lower. Very quickly, by the way, in terms of economic data, something to keep in mind. So yes, so today we got the retail sales number from Australia. That came out a little bit on the higher side, failed to meet the forecast, but still better than the previous. In terms of other data, oh, by the way, in terms of actually Australia, let me just have a look at what's happening with the Australian ASX200. And there we go. We're pushing back up. We're approaching this all-time high again, the 8,643 zone. Let's round it up here a little bit. So if we can clear this, wonderful. A forthcoming higher high will be confirmed and potentially could open the door to some higher levels. For the downside, I need to see a drop somewhere below this 8,455 zone, and then we'll go from there. Jumping into, like I said, before actually jumping into the US indices here, because I mean, I can see that the Dow was on fire yesterday. But quickly, just to pick up on the economic data. So today we're getting the ADP employment change figure, which is expected to come out significantly higher than the previous number. So, okay, let's see. On Tuesday, yesterday, we got the JOLTs, the US JOLTs job openings, and those came out much higher than anticipated. So, hey, it's kind of, like I said, it's a good sign, of course. I mean, the market seems to be doing quite well, and kind of working in favor of the White House administration, because again, we know that they want to pressure Powell to cut rates, and I don't know if it's going to happen in July, to be honest, but hey. So what I'm saying here is that basically the JOLTs came out higher. So if ADP today also comes out on the higher side, let's say it comes out somewhere close to the current expectation, that's fine. That's great. The only problem that I have is that if it comes out, let's say a little bit lower, let's say somewhere around 70K, then maybe the market will say, hey, wait, we were really expecting this, major jump, and now we're getting the 70. Yes, it's not bad, but it's not 90, which we already kind of started pricing in a way. So that's what I'm saying. So that maybe we could see a little bit of a correction lower. So I would say, like I said, if the number comes out somewhere below the forecast, but still above the previous figure, then just be careful about this. Like I said, the market might not really see this as a very, very positive thing, So yes, I'm not saying that we will sell off, no, but maybe we could stall a little bit, and kind of just wait for Thursday then. So in terms of other data, we have the EIA crude oil stock change. So if you are trading oil, keep your eyes on the numbers here, especially, like I said, especially this one right there, the EIA crude oil stock change. And apart from that, no, that's nothing major. But then, yes, of course, we will be jumping into Thursday, ladies and gentlemen. By the way, on Friday, I will still have the session. I will still hold the webinar because, again, yes, the US is not is going to be on holiday, but the rest of the world is working. So, let's not forget about that. Anyway. Yes, the volatility could be a little bit on the lower side. No, not arguing there, but still, the markets could be operational. Well, not could be, but it will be operational. Look, so going into Thursday, tomorrow, we're watching carefully the job numbers, the main non-farm payrolls figure, which is expected to come out a little bit on the lower side. Now, look, again, it's going to be quite interesting to see what's going to happen there. The problem that we're getting is that the expectation is oh, sorry, excuse me. The expectation is need that coffee a little bit. The expectation is the expectation is for a lower number, but if the number comes out even worse than the forecast, again, that could send a little bit of a shock wave. And it's again, it's an interesting moment. On one hand, the NFP comes out on the lower side. Hey, we need to boost the economy a little bit. We need to cut those rates, right? And but then if the actual number comes out on the higher side, hey, everything is great, right? So the economy is not in a problem. So hey, let's go cut those rates. So in general, you can find like reasoning for the White House to, or should I say, the White House can find reasoning, in both scenarios. So again, we'll see how that plays out, of course. Look, so for now, what we do is wait. I strongly recommend, although I don't really recommend a lot of things, but I strongly recommend not to trade before the numbers, because we don't know what kind of reaction we can get. If you still want to enter a trade, honestly, like, do the most minimal trade ever, because we could see increased volatility. Sometimes spreads could increase as well. So, and this is where, like I said, this is where you might get stopped out very quickly, especially if you have a very tight stop loss. So that's why I always say just wait for the number, because again, we could see is like a bit of a choppy moment when the numbers come out. And then it will, take time until the market will stabilize and will kind of adjust, and then it will pick the direction. So be careful, be savvy about this. Look, Dow Jones Industrial Average continues to rally. On Monday, if you remember, I talked about this and I said to you that I am leaning towards the upside. We needed only around 2%, to reach the all-time high. Now we need around 1%. We need around 1% to reach the all-time high. That is just amazing. So before, when we were just breaking this part, I said, well, look, we need around 4.5% to go higher, to reach the all-time high. And I said this last week in my videos. If you watched my videos, then yes, this is what I was talking about. Now we end up only with almost around 1% left to reach the current all-time high, and hey, maybe create a new one. But I'm a strong believer of the theory when if we're looking at the top three US indices, the Dow, the S&P, and NASDAQ, if two of those have already reached the all-time highs, then the third one kind of could play the catch-up game and could eventually, test the all-time high as well. It's not a guaranteed kind of strategy, don't get me wrong. It's not something that, it always happens. No, it does have its flaws. It does have its issues. However, a lot, I would say, at least more than 50% of the time it kind of happens. So, look, let's see what's going to happen here. And for me, it's very interesting to see, are we actually going to stall near the 45,073, or actually we're going to surpass that and just move strongly to the upside. At the moment, I'm just aiming for the current all-time high, and then I'll take it from there. So that's the situation with the Dow. The S&P 500, it's stalling right now. It's kind of seems like it's kind of waiting. It doesn't want to go further. NASDAQ, the same story. It's actually even correcting back down a little bit. Look, as long as we stay above the previous all-time high here, this or should I say now I can say the highest point of February of this year. If we stay somewhere above that 22,222, then yeah, we could continue targeting the upside. Very simple. We could continue targeting that 23,000 mark, and then we'll go from there. For the downside, a drop below the 22,222 zone could in a way open the door to some lower levels. And by lower levels, I mean, first of all, a move towards maybe this little target right here, this this upside line, which to be honest, maybe not the most how to say it, technically correct way of drawing it, but I'm just lucky that it coincided nicely here. These points like really matched nicely, so I'm gonna leave it this way, you know. But in general, you should have just drawn from the low of the 23rd of May here, and that would be enough. But initially, I will target this this line, but again, because it's going to be very close. So if a break of this upside line could lead to a move towards the 50-day EMA here, shown as the green line. Hey, maybe the 100 and 200-day EMA as well. DXY, the dollar index, yesterday looking good. So yesterday we reversed back up. Or at least today we're reversing it. Yesterday we formed something of a doji here. Let me just clear up the chart, and I want to have a fresh look. To be honest, I'll bring the downside line again because it's quite important here. So something like this. So basically, this is our downside line. This is from where we kind of start looking. We can start looking at the upside, and if we do break this downside line, then yes, wonderful. More buyers could join in, yeah, if we do clear this territory here, then I will consider some moves to the upside. Very straightforward, to be honest. Nothing much to add else here, but look, this 97.60 zone that I just marked, it's an interesting one. I'm not gonna say that this is, you know, right now that I'm gonna be looking at that. Basically, that if we pop above it, then I'm gonna consider a move higher. No. What I'm saying here is that still at this point in time, the downside line for me is the more important one. However, if this, let's say, starts shifting still somewhere sideways or even moves a little bit lower, then maybe when we shift a little bit more to the right, then the crossroad between this hurdle and this downside line could become that nice gateway towards higher levels if the US dollar wishes to, you know, go and push to the upside. For me right now with the US dollar, to be honest, I'm kind of still leaning towards the downside. I'm not really leaning towards anything higher here, but look, for now it's basically yeah. For now, these are the areas that I'm watching. Basically, I'm watching the 95 zone. That's that, you know, period kind of. That's what I'm watching. Yes, we're getting a little bit of a retracement right now, but don't get me wrong, it might, you know, stall still and could still drift further south. Let's have a look at the weekly here. You can see that the weekly is quite bearish, so we can still, like I said, see a nice move to the downside. Basically, I'm still targeting the 95 zone, and we'll go from there. I will consider an upside scenario only if we do break the downside line and we push. Well, actually, at this point, if we break the downside line, period. Look, let's jump into the German index DAX. So yes, the index is open, markets are open in Europe, and we remain above this 23,740 territory. Look, that's great. I talked about this a lot, and I said that, hey, as long as we stay above this area, I'm going to continue targeting the upside. So far, so good. We are moving, yes, we are moving nicely. We moved nicely to the upside. And hey, for now, I would say this way, that I'm still positive. However, if we do start dropping below this hurdle, below the 23,740, I'm taking a little bit of a pause. But if we do drop below the 50-day EMA and we fall below the 23,389 zone, or this highlighted area right here, then yes, I will consider a move lower towards the 100-day EMA. That's my game plan here for the DAX. It's a kind of a more of a safer option for me, at least, but as we know, in the markets, nothing is safe, nobody's safe, and well, you just need to be careful. You need to have good risk management. Let's jump into the FTSE 100. So yes, pushing back up. So okay, so far so good. Let's see how that is going to play out. But yeah, for now, I am kind of leaning still towards the upside, towards the 8,909 zone, and then we'll go from there. Ladies and gentlemen, let's jump into the Forex world, actually. There we go. This is what I was talking about previously about the rising veg situation in Nikkei here, where we had a rising veg, but we had the prevailing trend to the upside, and that's why it broke out higher. And similar story we're having here on AUDUSD. We don't have a channel here. We have a rising veg, so we're knocking on the door of the upper side of it right now, with the prevailing trend was to the upside before entering this veg pattern. So in a way, the breakout here could happen to the upside. If that happens, okay, great. I'll go further north. My next target will be somewhere around here. This is the level that I'm watching, the 0.6688. Need to drop my arrow here a little bit lower. There we go. So that's going to be my next target if we clear the upper side of the rising veg pattern. For the downside, pretty straightforward. Not only that I need to see a clearance of the lower side here, but also a drop below all these EMAs on the daily chart. But at the moment, everything kind of seems to be pointing a little bit more towards the upside. But again, don't rush, because we have the ADP today, we have tomorrow the NFP. So we have a short week, and that's where we could see some increased volatility. Very quickly on AUDJPY, my risk on, risk off monitor. So far, it's just stalling. It's not really making major moves. So what I would say here is that I'm gonna take a very conservative approach here. I would say I would prefer to wait for a push above the 95.75 territory right there in order to go higher. For the downside, I would say yes. I think that this 93.85 area right there, which coincides right now with the 100-day EMA shown as the blue line, and the 50-day EMA shown as the green line, is approaching this area as well. So if we do drop below all that, this can kind of open a nice door here for some lower areas, and then we'll go from there, ladies and gentlemen. Just a quick peek at NZD/USD. Let's not forget that next week, if I'm not mistaken, we're getting the interest rate decision from New Zealand. Let me just confirm that with you, ladies and gentlemen. Yes, that's coming out on July 9th. The expectation is for a rate cut of 25 basis points. Should I say by 25 basis points. And we'll see how that plays out. Of course, at the moment, everything is looking quite strong here for this pair against for the New Zealand dollar against the US dollar. But again, like I said, if we see if the market reacts negatively to the fact that the interest rate is coming out lower, then okay, we could see continuation move here within this rising veg formation. But what can I say? For now, if the US dollar continues to decline, then yeah, we would see the pop earlier than the 9th of July. We could see actually maybe this one picking up the pace, moving higher, and reacting. We could see the effects of the US labor market. Again, that's why I keep on saying, unfortunately, we cannot really rush into things right now. We just can have a look at this and just stick to it. But if you would ask me right now at this point, would I be a little bit more bullish or bearish? I would say I would be cautiously bullish, because again, looking at this picture, this looks like a nice little rising veg pattern, but because the prevailing trend was to the upside here, the greater chance for this one is to break out higher. either way, we still need a confirmation break through the upper side. While we remain inside the pattern, we could move within the pattern. So that means that we could still, let's say, we found good resistance near the upper side here. We could actually drift back down. We could, test the lower side of this formation and then kind of push back up again. So that's why don't rush. If you're bullish, then don't rush. If you're bearish, similar story. While we remain in here, I think it could be a little bit of a tricky moment here, and I rather just keep this one on my radar, but not do anything right now. Just like I said, keep because it's against the US dollar here. I'm going to be watching the release of the US job numbers, and then I'm going to have my glance at the NZD AUSD. USDJPY, on the other hand, is looking quite bearish here. We're drifting lower. We drifted lower yesterday. Today we're recovering everything what we lost yesterday, or at least it seems like that, almost. But we're still below this upside line. Again, this upside line is a little bit on the tentative side, but nevertheless, we're watching it, and hey, at the moment it looks bearish, but if we somehow climb back above this upside line and climb above the 50-day EMA here shown as the green line, then I'll consider a move higher. But at the moment, I'm a little bit on the bearish side. USDCAD, now this one's annoying, however, annoying and not. So this is a good example of the falling wedge pattern, which according to all the TA rules worked out beautifully, popped higher, so this is great. We did have the move. We did come close to the 50-day EMA, found good resistance here, and then reversed back down. So at the moment, I would say this way, that 1.3750 is the area that I'm watching for the upside. I know it's further away, but hey, I'd rather be safe than sorry. So a break of this downside line and a push above the 1.3750 is the area that I'm going to be, from where I'm going to consider some higher levels, because at the same time we could actually climb above the 50-day EMA. So all these confirmations are working out. But given the fact that we are right now struggling below this 1.3686 zone, this kind of gives me an indication that there could be some more downside. So, but I'm probably gonna be a very careful one, and I'll say drop below the 1.3540 zone, which is the lowest point of June. A drop below that, that's from where I'm going to consider some lower levels, because a forthcoming lower low will be confirmed. USDCHF. USDCHF, we remain below the 0.8037. Or actually 0.8040, I think that's the better mark here. So we remain below that. We continue to target the downside. We're in areas last time seen in 2015. Look, at the moment it's very difficult. I mean, this is a clear copy of DXY in a way, the US dollar index. So, not saying that you can gauge yourself with this one, but most of the time it seems to be moving in the same direction as DXY. So at the moment, I think that if the dollar strengthens somehow, then okay, great. We could see move to the upside. And another issue here is that somebody might say, but hey, isn't Swiss franc a safe haven? So yeah, I mean, I would say, yeah, you're right. It is a safe haven, but why is it moving? Why is it strengthening if the stock market is pushing nicely to the upside? Well, this is basically mainly driven by the weakness of the US dollar. So it's not really, maybe the Swiss franc is the strongest one, but it's the big moves here are kind of caused by the weaker US dollar, because, for example, if you jump into Euro CHF here, you'll see that it's strong, but the euro is also on the stronger side. So it's a little bit of a choppy moment here on this one. AUDCHF, yes, it's also strong. The CHF, I mean, it's also strong, but AD is not giving up. So there is a little bit of strength in the Swiss franc, but maybe because we have also a very unique situation when the stock market is rallying, but at the same time, market investors understand that this could be very short-lived. So in general, not only that they're maybe buying the equities at the moment just to kind of speculate on them, but maybe they're also jumping into Swiss franc just to protect themselves from negative shocks, which with this current administration, it seems like Every week we get something interesting, which kind of shocks the market. So, and in a way, that's how the game is played right now. Look, long story short, for now I am watching USDCHF, and I'm gonna continue targeting the downside. We fell below the psychological 0.80 territory, and as long as we continue to trade below that, I'm feeling more towards the downside, at least for now. Let's jump into EURUSD, ladies and gentlemen. EURUSD, there we go. We're getting that nice little reversal here, back to the downside. And let me just, so yeah, yesterday we formed something of a, I wouldn't say doji, but more like a maybe shooting star or something like that. But anyway, it's a possible reversal. So now it's like drifting nicely to the downside. Again, what I'm keeping an eye on is the low of yesterday near the 1.176160 zone-ish. If we do drop below the yesterday's low, I'm considering a little bit of a retracement, maybe towards somewhere here, the 1.163132 zone, and then we'll go from there. For the upside, for me, I need to see a pop at this point. I need to see a pop above the yesterday's high, or in general, the current highest point of July. I know we only have 2 days, but the current highest point of July. So that's what I'm looking at here. Very quickly on GBPUSD. Yes, we're seeing a nice. Look at this. I mean, okay. First of all, the arrows have skewed here a little bit because I haven't looked at this chart specifically for a while. But let's fix this issue. And basically, look, 1.3750, that's great. We're getting a nice little hold up here. Look at this, false breakouts, 1, 2. And still struggling to stay above this hurdle. This hurdle, by the way, is the highest point of January of 2022, or in other words, the highest point of 2022. So we're finding good resistance right here, and so far so good. That's great. So we're getting a little bit of retracement. Absolutely fine with that. No worries here. But let's see if we can actually get where it could potentially stall. So first potential stalling moment could be around 1.3690. 23.6% on the Fibonacci retracement here, drawn from the low of the 23rd of June to the high of the 1st of July. This is where I'm going to aim first, and then if that gets cleared, the next target is the 38.2 roughly. Again, you can do the same here on your charts, just to kind of measure it, like I said, from the low of the 23rd of June to the high of the 1st of July. Yep, at the moment I'm aiming for this one, then the 38.2, and then the 50. The 50, actually, I prefer the 50 because it's near my kind of one of my levels, which I think needs adjusting. Let's have a look. Okay. Yeah. Ish, I would say ish. I think the 38.2 is the more interesting one because that's the high of the 13th of June, ladies and gentlemen. Let me just get rid of the Fibonacci for now. So this is what I'm talking about. So this hurdle here, the 1.3632, is a good one because it coincides nicely with the 38.2. Good potential target. Let's see if we can, if we do drop below that, I will go lower towards the 50% here, and then we'll just kind of take it from there. So yeah, so that's my game plan here on GBPUSD. Let's jump into the commodity world, ladies and gentlemen. Gold looking good here. Gold rebounding nicely, but hey, I rebounded nicely, pushed back above the 50-day EMA. So far we're above that, so in a way there is a chance for this one to move back up, to be honest. I would say I cannot really deny that. Of course not. That would be crazy by me. 3,350 zone right here is the one that I'm going to be watching. If we do push back above that area, there is a good chance we could see a nice move to the upside. For the downside, a drop back below the 50-day EMA would be needed, and also maybe a drop below this hurdle, below this 3,273 territory, and then yeah, we could go from there. Silver, let's have a look at this one. This one's stalling, but still cautiously bullish. We remain above the upside line, and hey, yeah. For now, it's it's the problem here that if we continue to trade above this upside line, then yeah, I'm considering a move higher. For the downside, a drop below the 34.5886 territory, this whole zone, basically actually a drop below the 50-day EMA here shown as the green line. If we drop below that, I will consider a move to the downside. WTI oil, still watching this one, still loving the downside scenario. Honestly, look at this. Are we forming a beautiful bearish flag? I'm not saying that we are, but it certainly looks like one. So hey, look, like maybe if this is gonna drop, if this is gonna be a bearish flag, then honestly, we are building a very nice one. So it also confirms the idea of waiting for a break of this upside line here, taken from the low of the 5th of May. If we can get a nice clearance of that one, great, wonderful, ladies and gentlemen. We could go to the downside, and then we'll take it from there. So for now, long story short, if you're looking for some higher levels on this one, I would say wait for a push at least above the 200-day EMA, and then kind of, we could consider some higher levels. But at this point, no. With the upside, unless it pushes back above the 200-day EMA, then yeah, I'll get a little bit maybe interested more about with the upside. But at this point, Natural gas, let's have a look at this one. Beautiful break below the upside line, so no longer needed. Let's get rid of it. But as you can see, the 200-day is doing a magical job here. If we do drop and stay below the 200-day EMA, I'm going to lean further south. Platinum and palladium very quickly. This one has retraced a little bit. This one has retraced as well. Okay, good. Right, look, let's jump into the dessert. The crypto world. 107. Yes, there we go. Pushing back up. Basically, look, I'm going to stick to my game plan here, and I'm going to say the same thing, which I already said several times. I will go higher only if we do break this downside line. It's taken from the highest point of May of this year, and if we do clear this downside line, great, wonderful, I'll go higher. But at the moment, yeah, it's a little bit of a tricky moment right now. Look, that's like I said, that's my upside scenario. If we break the downside line, great, and then we'll take it from there. For the downside scenario, a drop below the 50-day EMA is required, at least that, in order to start at least considering lower levels. Bitcoin Cash, beautiful, interesting, very interesting, because we cleared that psychological 500 zone, and at the moment we're very much flirting with it again. We drifted back down here after reaching this area right here, the 527-28-ish zone, and we drifted back down. We're now resting just a little bit above that 500 area. I would have to say this, that if you're looking for some higher levels, then probably wait for a push above the 527 territory. But if you're looking for some downside, a drop back below the psychological 500 level, I think, could open the door to some slightly lower areas. Let's jump into Ethereum. Here, and what can I say? For now, it is resting on the 100-day EMA shown as the blue line, but it's stuck. It's stuck between the lines, between the EMAs here. So if you're looking for some higher levels, I think that, well, it's a little bit of a difficult moment here right now. First of all, this upside line no longer needed. It did its job. Thank you very much. We had our fun. Now we move on. This is what I'm talking about. This is what I'm looking at right now. This is the barrier. This is the 2,520 zone. I need a break above that in order to consider a move higher. For the downside, very straightforward. A drop and stay of the body of the daily candle, stay below the 100-day EMA, could open the door to some lower levels. Very quickly on Ripple. Ripple is also stuck in between the EMAs. So yep, this scenario is still valid. The downside scenario from the drop below the 200-day EMA on the upside here. The upside scenario is on a push above the downside line. Litecoin again. This downside line no longer needed. Thank you very much as well. Maybe no, even that it's not really working much. Okay, So very straightforward with Litecoin, actually. If we start clearing the 50-day EMA, we start pushing above it, slowly I'm going to shift towards the upside, and then I'm going to slowly aim for the 100, 200, and if we do push above the 200, oh, now that's going to be like amazing. Now this is what I'm going to like. This is where I'm going to get a little bit more comfortable, but at the moment, we're stuck here. The downside scenario is not off the table. A drop below the 83.30 zone here-ish could open the door to some lower areas. Dogecoin, similar story, struggling with the 0.1682 zone here, and we're staying below that. So if we do remain below this hurdle, I'm going to go towards the downside. Polkadot. Now this one's interesting. Now it's still holding above the highest point of April of 2025. We did overshoot that a little bit here, but look at this, we're still holding above this. And I'm not saying that this is kind of a bullish indication, no, because it could be, but at this point you should not really get, let's say, too comfortable saying, oh my god, look at this, I mean it's holding above it. No, it's just at this point it's acting as a good area of support. Maybe eventually it will fail if, let's say, even if the dollar index here rallies somehow. So that's why you try to play this one very carefully. First of all, let's check if we have something like a downside line right here. Kind of okay, we can keep it. But to be honest, I think that still the preference could be the 50-day EMA. If we do push and stay above that one, then yes, I will consider maybe higher levels, because at the moment, you can see that the 50-day EMA did provide good resistance before, so why not to consider it as a breaking point? And yeah, why not? So for now, there is a chance for this one, of course, to move lower, but again, a drop below that 3.25 zone-ish, it would be required. And finally, Tron. This one pushing back up, at least trying to. This area right here, the highlighted zone, I talked a lot about this, so this is my kind of gateway towards the downside. If we do break this area is roughly between the 0.2615 and 0.2667 levels here. Again, it's not really straightforward. I think that the 100-day EMA could be a better breakout point here if we are looking for some lower levels. But for the downside here, I would say that it's a bit of a tricky one. If we do drop below the 100-day EMA, then my next target is the 200-day EMA, and then we'll take it from there. So for the upside scenario, look, 0.2947, I think that this is something that we need to keep an eye on. If we do clear this, yep, the forthcoming higher high will be confirmed. But while we're below this, I wouldn't say that I'm very positive or something. I'm cautiously bullish, but because it can reverse easily, maybe it will go higher and then it will find good resistance here near this inside swing low of the 10th of June. If it's going to find resistance near this 0.2858, it could reverse back down, and it's going to be it could be a mess. So that's why I don't like these setups like this. No, I mean I'd rather wait this one out. Ladies and gentlemen, that is a wrap. Ladies and gentlemen, that is a wrap. Thank you very much. I really appreciate your time, your views, your likes, your comments, everything. I really do. Honestly, I really hope that maybe next time we can have more of an interactive session. Honestly, feel free to ask questions. That's what I'm here for. That's what these live sessions are for. But if everything was clear enough, okay, thank you very much on that as well. But ladies and gentlemen, look, join me on Friday. I know that the US market is going to be closed, but I will be running the show. But join me on Friday. We're going to have a look what's happening. We're going to wrap up the week. We'll see how everything played out. Yep, and then we'll go from there. As always, ladies and gentlemen, stay safe. Have your stop losses in place. Risk only what you can afford to lose. Don't overtrade, and everything will be fine. And I'll see you on Friday. Bye-bye.